What is going on, penny boys and gals? What is going on, stock traders? And welcome to our options trading live. I'm here with the Swinging Bull. How we doing, Bull?
Pretty good. Pretty good. Nice to see you. We're
Likewise.
here to start off the trading week. Let's
Oh,
go.
yes, we are. And let's just get right to it. What are you looking at as far as options goes? I know before the stream started, we were in the free Discord live stream. You were talking about selling options. So what are we looking at today?
Yeah, just a couple of charts I've been looking at. I'll start off on the daily chart. Number one is Lyft. Looks like they found a nice bottom right around $8. And with a huge gap to fill to the upside. They had a significant sell-off in the month of February due to earnings. As you can see right here, the day they announced the earnings, they literally dropped from, I mean, if we maybe count the day before earnings, they dropped from like $18 all the way to $10. So quite a sell-off on Lyft. They did continue to sell off for the next couple weeks, and finally hit a low of $8.19. And now we have three beautiful green candles in a row. So I'm liking what I'm seeing here. The level that I want Lyft to hold for this buying, to sustain this increase in value, to sustain here, is going to be the horizontal level about $9.50. So I'm going to go ahead and mark that red on my chart. If it falls below there, maybe this is not, maybe this $8.19 is not the floor. If it does fall below this red line, I'll be looking for the $8 level to hold for possibly a double bottom bounce. So there's a couple fail safes here. But ideally, I want this 950 to hold so I can continue making higher lows on the chart. So personally, I like Lyft where it's at right now. I think if it can hold 950, I'm not even going to be sweating the trade. And was just looking at the options chain earlier before we started this stream. And of course, this is the options stream. So I wanted to make sure I went over some of the opportunities that we could have with Lyft. And we do see this $7.50 strike on April 21st, paying a little bit less than 2%. There's a lot of open interest on there, but not really a lot of volume. So in a situation like this where the options chain doesn't really have the volume that I like seeing, and we're on the monthly cycle here on April 21st. In a situation like this, I'd probably go ahead and just do the shares on this. So, I think an entry on Lyft is probably pretty good here with the stop loss if the price loses $9.50 and doesn't recover quickly. So your risk on that is only like 5%, right? 4 or 5%. And if it does lose 950 and doesn't recover quickly, then we can just cut the play early, because we'll be anticipating a double bottom bounce around $8 if it plays out that way. Ideally, we want it to hold 950, and then we want it to get back above $10, around $10.20. And if it can get back above $10 or the low $10 area, we'll definitely be looking for a move to about $11.76, which would be a pretty nice gain. And that's just on the share side. So that's what I got on Lyft. Let me get to one where we can actually talk about options. But I did want you to understand why I'm not going to do an option play this week on this. As of today, maybe my idea will change tomorrow if more options volume does start coming in. But just not really enough volume on there for me to justify a trade on the option side. So I would go with the shares on Lyft with the parameters that I just talked about. But let's go to one where I think there's going to be a good options play. And this is going to be one on my main watch list, and it's basically on Apple, you guys. And I'll go to the chart and let you know why. I'm on the daily chart on Apple. You can see the lines on my chart, looking at this top chart here. And every time it's gone towards 157, the 157 area, we've seen it sell off quite a bit, okay? It happened back here in the end of October. So it was about 4 months ago. and then just couldn't quite get back up there. It did get back up there in February. It hit 157.14. Then we did have a couple red days after that. Comes back up to retest it again in the middle of February. And it just can't get up. That 157 is just trouble. It's trouble for Apple, for the bulls. So mid-February, it went back up there and then sold off again. We're talking 157 down to 143. So here we are again, right? So, if Apple can't get above 157 and hold above 157, I'm expecting another bearish move to the downside. Looking at this bottom screen here, I got SPY on the 1 minute. It's kind of selling off right now. We just fell below VWAP. All right, so I'll be looking for this to hold the low 390s. Not to kind of change subjects here, but there's just want to point out this off. So the bearish option trade for Apple for this week is going to be a call credit spread for me. Okay, so we could probably screw this monthly cycle. Good thing about Apple is there's never an issue with volume on the options. So that's why I personally trade Apple a lot. There's enough liquidity in the options volume. I don't have to worry about getting in and out of the play, having problems getting in and out of the play because of low volume. So this is the put side here. Since I'm looking at a call credit spread, even though it says the word call in there, if you're collecting a credit, we're shorting the calls. So we're actually bearish. All right. So call credit spread. Look, I'm probably looking at the 165 strike. We'll sell that one. Okay. There's over 3,767 volume on that today. So we could sell that one. So you could sell it for about $160, right? So we're going to collect $160 credit on that. And what we do to reduce margin requirements with our broker is we're going to form a spread by buying the 167.50. So we collected 160 in credit, but then we're going to pay a debit of about $100. So that overall, that's going to give us a credit of $60 when we open this spread up. And the spread is $2.50 wide. So in the options world, we times that by 100. So each spread we open up we're gonna need $250 for our broker to allocate, so our broker can open this spread for us. But for each $250 spread, we can collect $60. So do the math on that. 60 divided by 250. That's a 24% return on your money, folks. Okay, and we need Apple to stay below 165 by April 21st. And we don't necessarily have to hold it for 32 days. Maybe in a couple of days or a week, if Apple starts selling off, which it looks like it's kind of selling off right now in conjunction with SPY, we could always buy the spread back for cheaper, and then we pocket the difference. So that's how the call credit spreads work. What do you think about that trade, Matt?
No, I'm liking that one. I'm actually looking at Uber as well right now. I don't know if you want to bring that. I know you're talking about Lyft. They
Uber and Lyft kind of same sector.
Yeah,
right?
yeah. I was looking at that 1 minute candle there. So I was watching it right before that to see the minute, I guess 2 minutes ago, it was trying to do a little reversal here, but then it fell off hard, going from that 363 down to around 352. It looks like it had a history in the past of bouncing off that level, but it failed it pretty hard, and now it's looking like what do you think? Do you think that it's going to start? I mean, it's at 18. It's just pretty oversold. Are you seeing a little reversal here? Or you think it's going to continue dying off?
For Uber, just looking at the daily chart, this is a good example to draw a Fibonacci retracement on, in my opinion. And this will give us some levels going back from the end of December to current price action. And as you can see, Uber hit this low of 23.90 right after Christmas, right before the new year. Ended up rallying to $37.50. So quite a rally there. And then it starts pulling back and retracing. So this is why we draw the Fibonacci retracement to get our retracement levels. We're not going to use these levels as points where we're going to enter and exit the trade, but we could use these levels in conjunction with maybe a couple other indicators to help us enter and exit a trade. So, you know, personally, you know, we have the 61.8% Fibonacci level right around $29. That 61% level is known by traders as the golden fib level. So after we hit a low point and then we get a rally and it pulls back and we slap the fibs on there, there are traders out there that are patient and they'll actually wait for the golden fib to be tested. And it almost tested it about a week ago on March 13th. You can see this wick here came down to $29.97. It's not exact science, but you know it did come rather close. And as you can see, according to the price action, of course, there were some buyers that stepped into the trade when it came down there. So for Uber, you know, like I say, if you want to be a little extra safe, we could wait for it to come back and breach the 29 again. You know, go back into the 20s, the high 20s, and maybe take a long position there. Or we could play it off this 50% level, which is right around $30.73. So if we did, you know, and then we got this low here, $29.97, which is basically $30. So a potential trade on Uber, whether it's shares or options, if you were to enter it today, regardless of what happens, your stop loss could be if it loses $30, right, and doesn't recover quickly. So it's always good to kind of talk the trades out, you know, before you enter them. We're kind of formulating a trading plan for this particular trade because your trading plan could differ depending on what type of trade you're going to do, right? You know, so my trading plan is not always the same. It's going to depend on the underlying stock. It's going to depend on whether I'm doing shares or if I'm doing options. If I'm buying options, my trading plan will be different than if I'm selling the options. So, you know, we just need to make sure we have a plan for every scenario, and the plan will be different every trade, you know. So I wish there was like some black and white handbook I could give everyone and say, hey, this is how you trade. Unfortunately, it's just not that easy because all trades are different depending on the underlying stock and how we feel about the underlying stock. So let's jump into and see what kind of options trades that we could possibly do on Uber.
Yeah, with Uber, I typically like to day trade it. I'm not usually long on Uber. Uber is very volatile. The investors that are usually trading Uber they let it run up or down pretty hard usually. So I try not to get stuck in like swings with this one. Right now, if you look at the screen, I'm looking at that 1 minute chart. Like I was saying before, it was pushed. This just kept on pushing off of this 10-day moving average right here. The 10 moving average, and now it looks like on the minute chart we are pushing on the 20 moving average. But once again, it just keeps failing. It did break that 10 moving average, but it's still failing on that 20. So that's what I'm looking at because I know, like I said, there are a lot of emotional investors in Uber. I do see the divergence here in the RSI, but personally, it's not a trade that I would yet be willing to jump into too hard. Like I said, I do like to play Uber as a day trade. It did have that big fall off from the $32.36 range all the way down to this $31.58 range. So sometimes there would be a time where I would maybe buy get a call here and I like Uber because the calls are typically cheap. If you get the expiration for this Friday, you can probably get it for like $40-$50. But personally, I'm not going to be touching this one because it's still failing that 20-day moving average. And like I said, Uber, very, very, very emotional stock. People, as soon as it fails, people like to just sell off like it did here. If you look at that big red candle, it pushed right above, and people I was looking, I was like, but then it failed, and it failed in a pretty big way. So
yeah. I personally, when I'm day trading, I like the EMA 21 or 20, like you had is fine, or in the EMA 50. Those are the two that I think hold a lot of weight. And then, of course, the red EMA 200 to give us an overall direction of where the stock might be going for the day. But just as you said, if you're looking at the 1 minute chart on Uber, every time it gets close to the EMA 20 or 21, that it gets rejected. So if you're going to continue to be bearish for the rest of the day on Uber, very easy play. Just wait for it to get to kind of go up close to the EMA 20 or 21, and then you could enter puts right there. And if you're day trading it, the closest expiration date is going to be for Uber's option chain. It's going to be this Friday, March 24 expiration. And as you can see, even real close to the money, these options are not expensive at all. Okay, we got this 31.50 put selling for about $70. Okay, and we got the delta at 0.47 and the gamma at 0.21. So when we do the math with that, we know for every dollar drop in Uber, that the delta is going to increase by the amount of the gamma. So if the delta is 0.47 and the gamma is 0.21 and Uber drops $1, you're going to return about $68 to $70 return on this $31.50 put contract, which means you're basically going to double your money. That's if that move happens today. Okay, if that move doesn't happen today, we got to keep our eye on the theta. It's 0.0962, which is basically $10. So just keep in mind, if you are going to day trade Uber, and you are going to go with any recommendations, it's not financial advice. This is just what I would do. And you're considering whether you should hold overnight or not if Uber doesn't drop another $1 today. And it doesn't even need to drop a whole dollar. I mean, yeah, doubling our money would be nice, but shoot, when we're day trading, I'll take a 10% return, 20% return, just day trading it. So it doesn't need to drop a whole dollar for this play to work out. But if you don't get the move that you're looking for, just keep in mind, if you hold it for another day, this contract's going to lose $10 in value, regardless of what the price does. Okay. Now, if the play goes in your favor and, with the delta and the gamma, and we get enough of a move where it's just a lot more than the $10 that for the theta that we could lose, maybe it might be worth holding it for another day. But again, I'm the type of trader, especially when I'm day trading, I get into a play, I get my profit, and I get out of the play. I'm not holding overnight, hoping and praying. And why hold day trades overnight? I mean,
it's a day trade. You're not supposed to.
Yeah. And then what? You're going to be laying in bed and you're supposed to be sleeping and you close your eyes and all you see is UBER when you're trying to sleep, and it's just not fun.
You got your alarm set for 4 a.m. and just so you can watch pre-market, even though you can't sell your
we've
option.
All done that.
We've all done that. I'm just waiting for 9:30.
No, I'm setting it for 4. I want to see the pre-market data because I over allocated. These are the things we got to stop doing for 2023, you guys, if we want to become better traders. No more hoping, no more praying, and no more losing sleep. Let's just trade, what's in front of us. If we can get some money out of Mr. Market on a day trade, let's take that money, put it in our pocket, and not give it back to the market.
But Bull, I do have a question because when it came to Uber, I was looking at actually right now I'm looking at the 5-minute chart. I do see his, in the past, just recent past, like past couple of days, that this level, this $31. $0.50 area, just anywhere between 31.50 to like 31.61. It's been holding. That would be my only concern with puts. And maybe maybe I would for a day trade try to find see if once we get some strength, a little sympathy play, try to get that call going up, just in and out.
Yeah.
I'm talking sell this thing by like 2 p.m. if. Once again, I would have to chart out a little bit more on the other charts to make sure that I am seeing some more confirmation on the upside. But like I said, Uber, I don't know. It doesn't really trade based off the technicals as much as based off of what you would think that, if there were a bunch of Robin Hooders, as they call a lot of us, emotional traders, how would they react? And typically it does react very strongly one way or another. So I'm curious to see if it does hold it. If it doesn't hold this area and it drops below, I can see it. Like you said, those puts could pay off.
Yeah. And just with any other trade that we do, we always try and have a scenario for both possible outcomes. So we just talked about the puts, which and like I say, if you are still bearish, then you could enter puts off the rejection off the EMA 20 on the 1-minute chart. If now let's talk about calls, because we like to have a plan for both sides. If this $31.50 level holds up, which if you go to the 5-minute chart, just as Matt was saying, this 3150 has held up pretty lovely. Going back, I mean, we could just go back the last 3 trading sessions, not including today, and March 15th, which was last Wednesday, held that area very nicely, about 3150. Held it again last Thursday, and then held it again last Friday. So here we are again right here. So to be honest with you, I am liking calls better than puts here. So let's talk about the calls. We'll go same expiration date, March 24th. If 3150 holds up, this would actually be a better trade than the puts, I think, just based off the previous 3-4 trading days, and that 3150 has held up. And the beauty of calls on this is if 3150 doesn't hold up, then we just cut the play early, get out of it, right?
Right.
Because
that's probably going to happen before the market close. So
we'll know today.
Yeah, exactly.
Today, if 3150 holds on Uber, we're going to know that today. And these calls here, you get the $32 call. They're only $55.
Right.
So very, very affordable here. This would be a day trade again, you guys. Okay. So pretty affordable here. And, let's look at the Greeks. We got the deltas at 0.42, and then the gammas at 0.21. All right. So 0.21 plus 0.42, it's about $63 increase. Now that's if Uber goes up $1 to $32.50, and that's basically was close to what the high was today. So that would be basically 100% retracement from earlier in the day's high. So that's kind of asking the market to give us quite a substantial move. I mean, talk about a recovery, rebound, retracement there.
Right.
The beauty is, even if it just gets to $32, okay, which is going to be right around where these EMAs on the 5-minute are kind of all hanging out. So if the price does go up to there, we're talking, we're still going to get a $30 increase on our contract, and 0.3 divided by 0.55, that's still going to be a 55% return on your money. And that's only a 50-cent move on Uber from 31.50 to $32. So I'm glad we got a chance to talk about both directions, because I am actually liking the call side better on this play. And on these streams, I know you got MetaMat. Okay, that's kind of your NFT crypto, stage name, so you will. On these streams, should I be calling you What the Duck?
We can go whatever you like. What the Duck, man. I'm What the Duck in the Penny Boys Discord. I'm actually looking at right here. It's looking like it's fighting so hard. The Bears and the Bills. It's like that.
31.
When the two armies finally clash, and here we are right here, seeing what's going to happen on this. These next candles are going to tell.
There?
Yeah, the 1 minute.
Yeah, you're on the 1 minute. Okay.
I can see that a lot of emotions are going to be happening one way or the other.
well, and Duck, what interesting thing that you mentioned earlier too is look at that RSI making higher lows. We got the divergence on the 1 minute.
Yeah.
Price is going down, RSI is going up. So that's why I am kind of feeling the calls a little bit more than the puts right here. And the beauty of that call play we just talked about, Duck, is we have a really nice tight stop loss on this. I mean, it's not like we got this big gap where the price could go to like a next support. Literally, if Uber does not hold 31.50, we're out of the play with a super tiny loss.
Right.
And the upside is great. So I am liking the calls right here. And again, for everyone listening, that's if Uber holds 31.50, and this is a day trade for us. Okay.
I like Uber is so volatile. I'll typically trade. I'll look at it in the morning, not right before right before open, and then looking to trade it right as not right in the beginning of open, but maybe 30 minutes out. Once things cool off a little bit, 30 to 45 minutes after, because it typically does have a pretty big move in the mornings, and then around lunchtime is where it goes back to where it came, or it doesn't, and it really falls off, because this is usually the time where investors are like, all right, we gonna retrace back up, or is it just gonna fail and just fall off the face of the earth? So I'm curious to see about Uber here. It's looking interesting.
And you're right. And I'm just scrolling through some previous trading days on Uber, and literally it does typically have an opening move. Okay. But just like you say, by lunchtime, it's that lunchtime thing for Uber. By lunchtime, it's usually it's kind of at the end of the morning move. Like here's from last Wednesday, and here it is by basically 11 a.m. around lunchtime, it finds its bottom and then goes from there. And then even on last Thursday, with opening bell rings. And then by lunchtime, it's at the end of the opening move, and around lunchtime, it finally decides like where it's going to go.
And it's great because like they're cheap contracts, like 50-50, around 50
They are
to
cheap,
bucks
yeah.
a contract. So, so you're not risking too much. And they typically, like I said, they run hard. So you do and you're looking at deltas earlier. You have a pretty decent reward. I love trading Uber. That's why
Very nice reward,
we like having this stream at the 12 o'clock area, so we can we could maybe see what it's going to do each Monday.
It's a good time. It's a good time to have a stream because the after the opening bell and all the stocks have like their opening move for the day. Usually that's transpired, and this is where like midday we can find new opportunities if we miss those morning moves. So there's a lot of traders that don't even trade the first hour of the day because it's just too crazy, too volatile. And then right around lunchtime is when they're like, okay, I'm ready. The opening moves are over. Let's see if we can find an opportunity. So here we got
Uber.
Yeah, Uber's curling up. Duck, because we were just trading around $31.50.
Yeah,
we're at 31.62, and the contracts that we were talking about we're trading for $55. The ask is at 58 right now. So it is increasing here just with the 10-cent move on Uber. What's 0.03 divided by 0.55. I mean, that's already a 5% move,
right?
On 5.5%. Depending on your position size, sometimes 5% a day keeps the bill collectors away, and we'll just trade those. So already up 5% on that move from when me and Duck were talking about it. Let's see if it can continue making higher lows.
That's the question.
And again, we still have our fail safe, which was 31.50.
Exactly.
Mark a line right there. Mark a red line right there. We want the price to stay above 31.50. As long as it stays above 31.50, ideally, in theory, we're still in the trade. If it loses 31.50, that is going to be a when the bell rang this morning, we did get a wick down to 31.46, basically 31.50. But you can see the size of that bottom wick. Buyers were sitting there waiting, immediately jumped into the play at that level, probably because of the previous trading days that we looked at, Duck, where 31.50 has held up very nicely. So let me zoom out a little bit more and come back over here.
The best part about this is like for new traders, like, and if you're looking at the chart, like, the chart that I was looking at, when it came to deciding, what I wanted to do, whether calls or puts, I actually haven't, I'm not even personally trading this one right now because my phone's over there and I'm on the stream.
Sure, no worries.
But I think honestly, all I'm looking at right now, and it was just a quick moving average. We're looking at the 10 and the 20 moving average and the RSI. And then just scrolling out and just looking at past, price levels. And it's not about
we don't need much, do we?
Yeah, you don't know, like, you don't need to know like 45 indicators, and literally we're just looking at just these two moving averages. You can see that this past run, all of a sudden, the blue 20-day average is on top, and now all of a sudden
we're above.
Was just saying something. It's just simply a cross, isn't it? And I'm not saying that alone is enough, but then we looked at the past levels.
It holds a lot of weight.
It does, yeah.
Like just what you just showed. That just take those two moving averages. The price was below those moving averages for a good part of the morning, and now the price is above those moving average. That absolutely could indicate a reversal of the price there.
Yeah.
And RSI trending up.
Right.
So we got some good things going for us with this Uber trade. Mm-hmm. And then of course the thing that I think holds the most weight is Uber staying above 31.50.
Yeah.
And a lot of people get stressed out. They're in a trade and they get stressed out while they're in the trade. The trade is happening live with them, and they get stressed out. They're forgetting what they thought about before they entered the trade. As long as Uber holds 31.50, we're not going to svet it. So why halfway through the trade are you getting stressed out when it hasn't even broke our main rule yet? Right. And that happens to newer traders a lot. But looks like this call option we just called out live, Duck, is going to probably work out pretty good. The spread's nice and tight at 0.57 to 0.58. When we were looking at it, it was at 0.55. So it's up about 4 or 5%, holding steady.
Yeah, I want to break 31.66 here to see what happens.
Yeah, no doubt. And that 31.66 level you just pointed out actually lines up perfectly with my 50 EMA on the 1 minute. It's this yellow line here.
Oh, nice.
This comes out to 31.67. That 50 EMA I actually look at quite a lot when I'm day trading. So the price is kind of stuck in a little sandwich here between the EMA 20 and the EMA 50. It's kind of stuck there in the middle, right? So what we were talking about those calls that you could have entered for $55, and the price action is definitely doing what we want it to do. It's well above the 31.50, and just like what the duck was saying earlier, the price action was below this 20. I used the 21 EMA, but 2021 is close enough. Price was below it for a big part of the morning. Okay, the price has finally broke above it. So that's really nice to see there. Just like what the duck just said, I'll be looking for a break of 31.66, 31.67. If we can break above that and hold, I do see Uber coming to the high $31, probably 31.80 to 31.90 could be the next stop there. So we'll see what happens.
And for the new traders out there, for me, the only thing I was looking at when it came to 31.66, and that's this line right here. I just put a horizontal line there at 31.66. All I did was I just scrolled back and I just put this line, my mouse there so you can see the line. Yeah. And as you can see, these candles happen to be bouncing off of 31.66. So it's not, for me, it's not even about it wasn't about knowing about all these moving averages or knowing about, all these strategies. It's just simply putting my mouse there and seeing what's
in front of you.
Yeah. Right? So I just want for the new traders out there. I think that it's really easy to get caught up in, because we have a lot of classes on a lot of indicators, because it's important to know what is out there and what will work for you. But sometimes when it comes to trading, the best thing is just understanding how the candle patterns work, and how to chart out support and resistance is based off of candle movement, which is why that support and resistance free class we have is really important. And I will be going over that more this Thursday in the PBU live, because I think that's really important. It's just like 3 simple strategies, like RSI divergence, having a moving average, and just being able to plot out a few support resistance lines using just candle patterns. I think that for new traders is key, as opposed to trying to learn 45 different things.
That's spot on, man. And if anyone's heard the saying KISS, KISS, keep it simple, stupid, that stuff actually works. Okay, a lot of the traders that I know that have been trading for over a decade, their trading strategies are so simple. But that's because they spent the past 5-10 years going, trying everything else out, and at the end of the day, the simpler your trading plan and strategy, the better you're going to be. Because like what Duck was saying earlier, especially for the newer traders, you get to a point where you got 10, 15 different things on your chart, and now you got one thing kind of telling you the opposite of another thing, and then you're trying to figure out which one should give you the best signal. And of course, that's going to be difficult when you're trying to decide that when you went over 10 different things. Why not just have a couple things?
No, I mean, it's true. It's like, especially if you're good at it. Like for me, I used to only trade Uber and only trade certain setups based off of certain indicators. I didn't try to learn it all, and I did really, really very well doing that. I mean, same deal with like making content. There's a time where I used to just try all these different types of content. I'm gonna try to do this. I'm gonna try to do that. As we see, Uber is trying to push here on that.
Yeah, that level you were just talking about, 31.66. If it breaks above that, this thing's going to 31.80s, I think.
But then I decided, I found a style that I like, which is that split screen thing that you've seen me do in the past. And I just stuck to it, and that's when I've been the most successful. So I think a lot of just life and trading, can kind of be your life skills and your life lessons can kind of go into trading when it comes to psychology, 100%.
Yeah. All right. Let me just answer a couple questions real quick, Duck. Slim Pickens says, "What EMA do you use again when day trading?" Everyone's different. For me personally, I like the 21 EMA. Duck uses the 20. I think either or would be fine. And then me personally, I put a lot of weight on the EMA 50 and the EMA 200. Those are the 3 that I use. Now I know the lowest one I have is the EMA 21. Sometimes I'll pop in the 13. Okay, so just the 4 that I would use is, and these are EMAs, not MAs. I use the MAs on the bigger time frame charts, especially the daily chart, because there's a lot of weight that people put on the MAs. So I use MAs for the bigger time frame charts. The day trading, smaller time charts, the 4 that I use are the EMA 13, 21, 50, and 200. That's it. I don't use any more than that. And sometimes I'll just use 3 of them because I don't really like a lot of lines on my chart, if I can help it. The other line you see here, this is the VWAP. I also use that pretty heavily when I day trade. So I hope that answers your question, Slim Pickens, on the EMAs that we use for day trading that I personally use. The next question that he had, this is a good question, Doug, from Slim Pickens as well. What would your options stop be? When I day trade options, my stop is never more than 20%, no matter what. Now that's just for me personally. Some traders that have a higher risk tolerance, maybe they'll do 30%. I would say no more than 30%. You should not be taking day trading losses more than that. Me personally, I use 20% because I only play setups, kind of like this Uber setup here, where we know 31.50 for the price action on the chart is kind of like, make or break for the trade there, which is going to be nice and tight since Uber's trading at 31.67. So you could probably even do a 10-15% stop loss, maybe give it a little bit of room. So that's just what I do personally.
Yeah,
when I'm day trading, it's 20%. Yeah,
I'm very similar in this. I like what you said there about like knowing the 3150, because like I know a lot of people are worried about like, oh, they get into an options alert, and they're like, where's my stop? Is it 10%?
like percentage, right?
Yeah.
They get hung up on the
The
percentages.
percentages. I like to personally look at the chart and then see, all right, this is a support that I'm looking at. I'm not going to trade it past that support if it breaks that support. So I personally think that looking at the chart and finding a price level is a lot more valuable than just like looking at a percent. Percent is great for limiting your risk. If I don't want to lose X amount of money, that's where percentages come great. But when you're looking at actual levels of stopping out because the trade is no longer a good trade or a viable trade, I think levels are very important.
Yeah, and I mean the closer the level is to the price and the setups there, I mean we're talking about a risk of 5-10. I mean, if you want to talk about percentages, we're talking about a risk of 5-10, maybe 15%, but it's going to be nice and tight if your level that you're trading off of is really close to the price and you were patient, you didn't enter the trade prematurely. When the price wasn't even near the important level. If you guys can figure out a way to be patient, and wait for the price to get as close to that important level as possible, that's where you're going to see your success is going to start going up a lot more. Simply Frank says, I'm right there with you, Doug, with levels and stopping out. Only thing is you have to make sure you follow your level and not compromise. Yeah, exactly. Simply Frank. Don't be justifying, oh, okay, Uber loses 31.50. Now I'm going to justify why I should stay in the trade, when before I got into the trade, I already said make or break 31.50. The price loses it and doesn't recover quickly. And when I say recover quickly, it needs to recover like, especially if it's a day trade, it needs to recover in the next 10, 20, 30 minutes. If it doesn't recover quickly, then I'm out of the trade. If you don't respect those levels, and Uber does drop below 31.50 and you're saying, oh, well, maybe that was a stop hunt or something, or, people are coming up with these excuses why they should stay in the trade, when at the end of the day, you might as well just take your tiny loss, because you're going to end up losing, more times than not, you're going to end up losing a lot more than if you would have just took your tiny loss. It didn't work out. It didn't hold that level that we said to ourselves in the beginning, that we're not going to, the price loses this level, we're out of the trade. Then we're going to be just fine as long as we follow our own rules, right?
No, I agree.
Yes, Snowflake says once you start talking yourself into holding,
right?
Don't be doing that.
No. We have another great question. We have, as we see on the screen, I just pulled over the Discord chat onto the screen on the YouTube, but we also have some great questions here in the YouTube as well. We have a question here from Josiah. SPY puts bad today. How are we looking as far as SPY goes? And We will get back.
Yeah.
We'll go back and forth to Uber as well because
Sure.
I know we're in that trade. But
I'm gonna show you guys some levels on my SPY chart. And these are levels that they're longer term levels. These aren't day trade levels that we delete tomorrow. Okay, so I'm gonna go to the one chart view so it looks bigger here. And we're I know it looks a little crazy, but I'll tell you what the different colors mean and what all this means here. So we're on the daily chart. First one, just go ahead and draw a Fibonacci retracement. Let me make this a little darker because I think here that might be easier to see, you guys. So the white lines, let's talk about the white lines. This is a Fibonacci retracement from January of 2022. Okay, so this is a little over a year of price action where we're starting this retracement. Go ahead and draw it from the top, which is going to be 470.52. Mine was off a little bit. Let me hold on. There we go. There it is, 470.52. Okay, go ahead and draw it down to the low of 345.20. That was the low we hit on October. Okay, so let me just make sure this is lined up properly. Unlock this. Okay, so these are going to be levels that are longer term levels. If this thing's not, hold on. I mean, it's kind of close enough. 340. There we go. 345.20, and then 470.52. Perfect. Let me lock that into place so it doesn't move on me no more. So these are important levels as far as retracing back to the upside of the high of 470.52. And as you can see, we have a white line right here, which is the 38% retracement, which is 393. I've been talking about the low 390s for a long time, you guys, for the past couple of weeks. And so these are the white lines. These are the longer term retracement. The yellow lines is more of a medium time frame retracement. And this is going back the other way from the low of 345.20 up to the recent high that it made to 416.72. And I made these yellow, you guys, just so I know the white lines, I'm going to have more weight on it. Okay, the yellow lines are still important, but the white lines are going to have more weight, I think. And it's kind of funny because the white and the yellow lines kind of lined up pretty good when SPY had a floor here in the mid 375, 375 area. Here's a white and yellow line together. So if you ever see the white and yellow line together, this is probably a little more of an important area that we should keep our eyes on. But so these are the two different Fibonacci's I have on my chart. The white is longer term, a little bit more weight on the white lines, and the yellow are still important lines, but not as much weight as the yellow. So this is where the price action is now. To be honest with you, SPY needs to get above 393 and hold. If it doesn't get above 393 and hold, we're definitely going to probably be coming down to the low 380s. All right, I do believe that. If we look at this daily candle from the price action from St. Patrick's Day last Friday, it opened up here because we know the red candles. We always open at the top of the body of the red candle, and the close of the candle is at the bottom of the body of the red candle. So last Friday we opened up above 393, and everyone was like, "Oh, okay, great. We're above 393. Maybe we get a retest of 400, right?" Never happened. Got a massive rejection. Ended up closing at 389. So about a $4 move to the downside on SPY last Friday. Now we're kind of stuck in the low 390s, right? But if we can't get above 393 and hold, I expect a move over the next week or two down to the low 380s. So that would be my put play there. If SPY gets above 393 and we have like a day or two of green above 393, well, then we'll go call options for the test of 400. That's my plan on SPY.
Hey, Bull, you see Uber?
Let's take a look at Uber.
Doing that push.
We called out a live call option on that. Let me go back to Uber.
Well, I wonder what their call option is at right now.
Let me see, 31.71. Let's take a look at the call option we called out. Oh wow, yeah, it's a nice tight spread too. It says $60 to $62. We called this out at $55, you guys. We could just take the mid price of 61. So that's a $6 gain per contract divided by 0.55. That's 10 to 11% gain there, Duck, on those Uber calls we called out. And that would, and me and Duck talked about this live, you guys, on what our reasoning was behind it. It was this very, very important level at 31.50. Okay. And then also the price action broke to the upside on the 1 minute chart over the 20 or the 21 EMA. And the price is now holding above that EMA. And now also the price is above the 50 EMA, which is what I give a lot of weight to.
Oh, that's big.
You can see my yellow 50 EMA here. I mean, price breaks above that. We're probably going to go test this 200 EMA, which again, I said earlier was going to be 31.80 area, the high $31. And that's exactly where it's going, isn't it?
It looks like it.
So amazing play there live. Bid and ask on those call options on Uber is now up to $62 to $64. So about mid price of 63. So mid price of 63 minus our cost basis, which was 55. That's an $8 per share gain on our contracts there, which is going to be a 15% gain there, Duck. So great call out there live. And I would expect a little bit of selling. We could see some resistance around 3180, you guys, which is right where this 200 EMA is. Let's see where the VWAP is. The VWAP's above that.
Oh, good.
So we got 2 levels above it that we could keep our eye on, that we could have some possible selling. But we'll see what the price does. But nice 15% gain on those Uber calls with the Duck. And it was your idea to go over Uber today. So thanks for bringing that to our attention.
I'll definitely be bringing Uber up as much as possible during these streams. That's my
and that's another thing, Duck. You know, and there's a reason why you're doing that, because you're comfortable with Uber.
Oh yeah.
You know, you guys, if you can find a stock that you're comfortable with and that you truly like have the pulse of it. Like you're in rhythm with the stock, and just trade it. Just trade that one. You don't have to trade 100 different stocks. Find a couple stocks that you have a good pulse on them, and just trade those. And you'll see you'll see your P&L at the end of the month, start improving pretty dramatically, because you're trading something you're comfortable trading. You have a good idea after looking at it for weeks or months, over time. You know where the key levels are at. You know where it's found support. You know where it's found resistance, and then you're just going to make your trades based off those levels. And Snowflake says what the Duck the Uber's up 18% now.
There we go.
I know you're going to be clipping that one later, Doug. Let's go.
I'm all about the content.
18% gain live, and very simple, you guys. What the Duck were saying earlier. Very simple play off this 3150 level. It's as easy. That's how easy this is. Okay. And then we're not gonna, we're gonna have some losers. That's just the nature of trading. It's just, I'm on a pretty good win streak on my spreads. I think I'm 15 for 15 on 2023. So there's this little thing in the back of my mind. I am anticipating a loss coming soon, because I'm not going to sit here and say I'm perfect. But, we're going to have some losers, but as long as we have a plan going in, it's going to cut out a lot of the stress and stuff.
Is that 3180 that we see?
3180. Yep. And this is going to be the area where I'm going to expect possibly, I'm not saying it's guaranteed, there could possibly be some resistance here, because I'm not the only trader looking at the 200 EMA on the 1 minute. Okay. This is a line. This is a line a lot of people look at. Okay. So, there could be people taking profit here. We'll see.
Yeah, I mean, I like
this. You can see it slowing down a little bit too, Doug. Look.
Yeah, I mean, it's the RSIs. It's getting there. It's definitely getting there. But no, as soon as it broke that level you were talking about, like right below that, like that 331, what was it, 3166? That was great.
Yeah.
And then even I saw like 3175. Like in the past, I was looking back. Like there were some levels at the 3175 area that it definitely hit off of a lot around over here, also around there. Which I was like, if it can break 3175, this could be interesting. And even you zoom out the 5 minute, it just broke the 20 moving average right there in the 5 minute. And I know that Snowflake was talking about the 15 minute calls. And yeah, it's looking like that's the next one is trying to break up here. Is the 15-minute break in these moving averages. So
yeah, that's a pretty nice curl up on that 15-minute chart, I have to say.
Yeah.
Look how bullish that 15-minute candle is.
Back to that. There it is.
Look how big that green candle is. Zoom in a little bit. Yeah, look at that bad boy.
Nice.
Oh, yeah. Doctor's typing here.
Yeah,
I think he plays a lot of my spreads. But yeah, back to the 1 minute on Uber. I think if we can get above the 31.80, there's a good chance we're going to go up there and test VWAP at 31.93.
Oh, Doctor's saying right here, Apple's starting to break its neckline. I remember we were talking about Apple in the beginning of the stream.
Yeah, let's go back to there. I'm looking at Apple here. This 157 has been resistance since last year. I mean, past 4 or 5 months, it's been this 157. Apple just had a tough time breaking above. I want to show you something on my chart, Doctor, if you're looking at my screen. And this is the Bookmap service. I call this level 4 data. A little bit more advanced here. This is called Bookmap on Thinkorswim. I just want you to look at this resting institutional order up here at 157. Look how red that is, and it's been sitting there all day. Let me just zoom out here. You see this big red, big thick red line here? That's an institutional order, 156,302. Very, very big resistance there on this Bookmap chart. What I'll be looking for is the price comes up to there. We'll see if it can push past there. If it does liquidate this order of 156,000, that's going to be an insane impulse move to the upside on Apple. I think if that happens, we're going to definitely be going into the 160s, probably 164ish. Possible retest of 175 on Apple. This is bigger time frame, okay? But this 157 is, look how dark red that is. I mean, that is an institution, multi-millions dollar order here that's been there all day, okay? So 157 on Apple, that is the resistance everyone needs to be watching today. If we can get above that and break through, oh boy, we might be bullish on Apple. Keanu Reeves asks how can you get that on the chart. You need to contact Thinkorswim customer service, and they can activate it for you. But it is by request only. This is not something that's on the default. Oh yeah, Dr. Darcy, I can see why you played that credit spread. Exactly. And if Apple liquidates this 157 area, that call credit spread could be in trouble, and I'll just get out of the play. But I know what I'm waiting for, right? If this institutional order doesn't get liquidated, Apple's about to tank hard, bro. And then that's when I'm going to take profit on my call credit spread. So good stuff there, you guys. What else we got? We got just a couple more minutes. You got any closing thoughts, Doc? Or
I just got I'm just still looking at Uber.
Nice play on Uber.
I like that.
Let me go back to Uber.
Well, we got it because I don't want to close out without giving them some, like what we're looking at as far as a possible, selling points or targets, or just what to look for the next, because we're getting off here in the next couple minutes, next hour or so.
Yeah. For this Uber call that we just did live, I mean, it's trading at $66 now, Duck. So 0.66. That's an $11 per contract gain on a cost basis of 0.55. You folks, if you took that with us, you're up 20%. This is a day trade, so you should at least have your stop loss, I think, at 10% profit. Let's go ahead and make sure we can at least get half. Other traders, maybe you could probably do. It's trading at 6.66. What we could actually do, you guys, let's pull up. If you want to just share my screen real quick, Duck, and I'll show them where they can put their stop. And this is an interesting way. You guys don't need to do your stops like this, but we're going to actually chart the premium. Ooh. So you just go on the Webull option chain and click on anything other than bid and ask, and then it actually gives us the chart of the premium. Okay, so I mean, you could put your stop loss probably right here This was over here like 0.62, maybe pointed at like 0.60. I mean, if you put it at 0.60, that's going to guarantee a 10% gain regardless. So let's go ahead and at least lock in 10%. Do not let this go red on you guys. We
That
got
is
20%
that is
profits.
a beautiful thing to say, that our stop losses is to lock in. I always love setting
Stop
stop
loss is
losses as
in the
profits
green.
in the green.
Yeah, some people think stop loss where, it's always like a red number. How about a stop loss in the green? That's a beautiful thing. So let's go ahead and on this Uber, and it's a day trade. If you haven't already, again, this is not financial advice. I can't tell you when to buy and sell. For me personally, my stop loss would already be at 0.60, you guys, to lock in at least 10%. And you know what? If Uber continues to pump up to the VWAP, then we just move our, if it gets to 0.70, well, let's go ahead and move our stop to 0.65 and lock in 20%. Because at that point, you're up 30%. So that's how you manage your stop loss. It's just, especially if the contract is trading at like, 0.50, 0.60, 0.70, move your stop loss every 0.05, it increases. And that way you have a 0.05 buffer to potentially stay in the play to hopefully capture more upside. And that way you're not just selling it, completely getting out of the play. Let's just trail the contract price by 0.05. And the beauty is we can go ahead and do that in the green and lock in at least 10%. And if it stops you out at 10% profit, who cares? We didn't go red on it. We locked in 10%. It's a day trade. There's going to be plenty more day trades. Don't get so hung up on like this only trade.
Right.
If you can
And
lock in 10%, take the money.
And nothing wrong with taking profits, at 15, 20, like if you see profits that you like, you're like, I could cash this out, put it in my bank and, go buy myself something nice and go ahead and do it. I mean, right now I'm looking at the 1 minute, we're looking at the 1 minute chart here. It is trying to hold above this 10-day, the 10 moving average. We're looking at 20 next, possibly if it does break below this. The nice thing is I'm looking at the 5 minute here. If you look at the 1 minute, we already got that crossover, we got that 10 above the 20. On the 5 minute, we do not yet. So it looks like I'm going to see if we have another cross here, that could be very, very bullish, I believe. And then as Snowflake was saying, we're looking at the 15 minute as well. Seeing if it can break and hold above this 10 moving average, go into the 20 next. I'm still bullish on this one, but I would watch it very carefully. Like I said, if it all it takes with Uber, in my experience, and like right here, you can see it broke below, but it did hold. So I wouldn't panic right with the first break of one support. I would definitely wait to see if it does hold the next one. But if it was to break this one, like here, if it was to break down and break down the 20. No, like what I've seen in the past is it does typically react pretty quickly. So I definitely would have the stop losses ready and in place for profit. But right now we're looking good. We're looking at 31.83. Those of you who are in this play, let us know in the comments if what you're up right now, what your plan is, what you are planning on selling at, either for obviously for profit no matter what, because like Bull said, we're taking profit regardless, right, Bull?
It's a day trade. Don't get greedy, you guys. You start getting greedy and you're going to get bit. I'm telling you, you don't want to get bit because it hurts. Don't get greedy. It's a day trade, you guys. You can make 10% in one day. I mean, come on, you guys. There's people that are happy that just get 10% on their portfolio for the year.
That's true.
And people are getting greedy and not taking 10%. Come on, man.
Looks like we got, I remember NATO earlier was saying they're up 15%.
Snowflake got filled at 0.53 and he's up almost 25%.
There we go. Let's go. 25% up. We got Slim picking up 12%. That's
Doug, I do have a one-on-one coming up.
Yeah, let's do it.
I'm not sure. I mean, you can stay if you want, but I mean, this was a great session.
This is fun,
wasn't it?
I think going forward, we'll do our normal 12 o'clock, check out Uber and see how it's doing, to see if it's looking like a play.
Hey, listen, I like just playing Uber until it doesn't work anymore. How about that? We'll just play Uber and then I'll sprinkle in some of the trades I'm looking at.
Exactly. We got SPY, we got Apple. We talked about today as well. But yeah, no, this is a great stream. We will
big level on Apple, you guys. 157. I just showed you on level 4 data. All right. Big institutional position there at 157, resting order. So be careful of that resistance. If you're long on Apple, you might want to consider taking profit because we're right around where that institutional order is. So But this was fun.
Yeah, let's go. Let's go ahead and close up the YouTube, and we'll stick on the street on the Discord for like a minute, just for a second. So for those of you watching the YouTube, we appreciate y'all tuning in, and we will see you next time. Until then, as always, we hope that you all make some bread.
Cheers, y'all.